Las Vegas condos are crashing, and nobody wants to admit it. Right now, there are over 2,300 condos sitting unsold across the valley. That is a 60% surge from last year. These are not just numbers on a spreadsheet. This is a full-blown collapse happening in real time. If you own a condo in Vegas or are thinking about buying one, you need to hear this. The median price for condos just slipped to $37,000. But that number does not tell the real story. What is actually happening is way worse. Properties that used to sell in days are now rotting on the market for 2 months, 3 months, some even longer. We are watching inventory pile up at a rate we have not seen since the last crash. In March alone, there were 2,024 units available with nearly 4 months of supply. That is not normal. That is a crisis. And here is what makes this different from regular market cycles. The condo market in Vegas has always been the first domino to fall. Always. When things went bad in 2008, condos crashed first and crashed hardest. That amounted to 70% value destruction. Entire buildings went into foreclosure. Now those same patterns are emerging again, and everybody is pretending it is just a little slowdown. Let's get into what is really destroying this market. Association fees are absolutely crushing condo owners right now. You buy a unit at Palms Place or Trump Tower, thinking you have made a solid investment. Then you realize you are hemorrhaging $800 to $1,600 every single month, just in fees. That is $19,200 a year on the high end, gone before you even pay your mortgage. At some buildings, these fees have jumped 20 to 30% in just the last 2 years. Special assessments are hammering owners left and right. Buildings that were thrown up during the boom are falling apart. The Ogden needs elevator repairs. Boom, $5,000 per unit. Allure needs roof work. Another $8,000. These bills just show up. No vote, no warning. Just pay up or face a lien. And in Nevada, that lien can lead to foreclosure faster than you think. Speaking of foreclosure, let me tell you about Nevada's homeowners. Association foreclosure laws. Your association can literally foreclose on your property for missing just a few months of fees, and their lien takes priority over your mortgage. Think about that. You could owe $400,000 on your mortgage, be completely current on those payments, but miss $2,000 in fees, and they can sell your condo at auction. This isn't hypothetical. Notices of default are up 28% year over year in the valley. The high-rise market is getting absolutely demolished. In September, only 39 condos sold in all the major strip towers combined. Meanwhile, there are 494 units for sale in those same buildings. At this rate, it would take over a year to clear the current inventory if nobody else listed. But people are listing. They are panic listing because they see what is coming. Look at what is happening. Building by building, the Signature at MGM used to be the hot investment property for rental income. Now units are sitting for months. Trump Tower, which markets itself as ultra-luxury, is seeing price cuts of $50,000 and $100,000, and still no buyers. Even Palms Place, which allows short-term rentals, cannot move inventory. In July, they sold just 4 units. The rental market that was supposed to save these investors is collapsing too. Vacancy rates have shot up to nearly 10% valley-wide. That is almost double what it was in 2022. All those people who bought condos to rent on Airbnb, to traveling nurses, or to convention goers are sitting on empty units bleeding cash every month. The tourism softness is real. Visitor counts are down year over year, and conventions are not filling hotels like they used to. And the numbers are brutal for anyone trying to rent these things out. Average rents for condos have been sliding for 6 months straight. In areas near the Strip, vacancy rates are hitting 7.6%. These investors are competing against 12,000 new apartment units that came online in the last 2 years. It is a bloodbath. Owners are offering 2 months free rent, paying broker fees, doing anything to get bodies in these units. New construction has completely frozen up. Developers see what is happening and they are running for the exits. After this year, the pipeline is basically empty. No new condo towers are planned. No major projects are breaking ground. When builders stop building in Las Vegas, you know something is seriously wrong. These are the same builders who kept building through every downturn except 2008. Now they are pulling back hard. The luxury market is in free fall. There are over 100 condos listed above $1 million right now. Last month, only 10 luxury condos sold. 10. We are seeing price cuts of $300,000, $400,000, even $500,000 on penthouses. The Waldorf Astoria is supposed to be the cream of the crop. Units that were listed at $3.5 million are selling for $3.2 million if they sell at all. What nobody is talking about is the conversion disaster brewing. All those apartment buildings that got converted to condos during the boom are falling apart. Buildings like the Martin and the Ogden are hitting owners with massive repair bills, plumbing failures, heating and cooling systems failing, structural issues, and the owners pay through more special assessments. Some people are just walking away rather than throw good money after bad. The data is screaming crisis, but the real estate industry keeps pretending everything is fine. They will tell you the median price is holding steady. They will point to single-family homes doing okay. But condos are different. They are leveraged plays on the Vegas market. When times are good, they soar. When times are bad, they crash harder than anything else. And right now, times are bad and getting worse. Here is what is really terrifying. The same dynamics that caused the 2008 condo crash are all here again. Over-leveraged investors who cannot carry negative cash flow. Rising homeowners association fees are eating up any profit margin. Special assessments are hitting when owners are already stretched thin. And most importantly, no buyers. The buyers have vanished. They are gone. The California exodus that fueled this market is over. Those tech workers and remote employees who flooded Vegas in 2020 and 2021 are not coming anymore. Their stock options are underwater. Their own home values are dropping. They are stuck. And without California buyers, the Vegas condo market has no floor. Even worse, the investors who bought multiple units thinking they would build rental empires are getting destroyed. They are carrying 4, 5, or 6 condos, each bleeding $1,000 a month in negative cash flow. The short-term rental market they were counting on has been regulated to death. The long-term rental market is oversupplied. They cannot sell. Without taking massive losses, they are trapped. The psychology has completely flipped. 2 years ago, people were bidding over asking price, waiving inspections, buying sight unseen. Now sellers are cutting prices every 2 weeks and still getting no offers. Open houses are empty. Realtors are calling, begging for any offer, any interest at all. The fear is palpable. And this is just the beginning. Wait until the recession really hits. Wait until the casino layoffs start, and they will start. Vegas is a boom-bust town, always has been. When the economy sneezes, Vegas gets pneumonia. And when Vegas gets sick, condos die first. We are already seeing convention bookings down, tourism softening, gaming revenue flatlining. The dominoes are lining up. The smart money is already out. Institutional investors who bought hundreds of units in 2020 and 2021 are quietly dumping inventory. They are not advertising it. They are not making a big deal about it, but check the records. Blackstone and Colony Capital, these big players are reducing their Vegas condo exposure. They know what is coming. So what happens next? If history is any guide, this gets much worse before it gets better. Condo values in Vegas fell over 70% in the last crash. Entire buildings went into receivership. Homeowners associations went bankrupt. Owners just mailed in their keys and walked away. And here is the thing. The fundamentals now are actually worse than 2008 in some ways. At least then, the buildings were newer. At least then, fees were reasonable. The timeline is accelerating too. In 2008, it took about 18 months for the condo market to fully capitulate, this time with social media. With everyone having real-time access to data and with fear spreading instantly, it could happen in 6 months, maybe less. Once panic selling starts, and we are already seeing the early signs, it becomes a stampede. For anyone holding a Vegas condo right now, the math is brutal. You are losing money on rent. You are paying crushing association fees. You are facing potential special assessments. Your property value is declining, and you cannot sell without taking a massive loss. It is a nightmare scenario, and thousands of owners are living it right now. The bottom line is this: the Las Vegas condo market is not just struggling. It is collapsing. The inventory explosion, the buyer exodus, the rental market saturation, the homeowners association crisis, it is all happening at once. This is not fear-mongering. This is what the data shows. This is what is actually happening on the ground right now. And if you are not prepared for what is coming next, you are going to get crushed.